Let me think aloud here. So is the stock market high because of some wishful thinking among the investors that blind us from our current situation? No, something along those lines were actually famous economist Robert Schiller's words in the year 2000, just before the market crashed. Now, in the year 2020, where we currently live, we have a pretty interesting situation going on with the pandemic. We also got the US election coming up, so it brings us a lot of uncertainty. I don't think I'm the only one who's concerned that, hey, what should I be doing now? I know I should be investing long-term into, for instance, the stock market. And in today's video, I will show you what I'm currently thinking, what's going on, give you a quick brief, and also show you how does my investment portfolio look like. And this will be from a Finnish perspective, but I also think it's applicable for you folks from other countries as well. Yeah, so let's jump along and let's take a look on the inside. So today's video is not investment advice, but instead what I would like you to take from this video is to give you a brief of what's going on the stock markets. If you're a beginner or haven't been catching up to it, it can function as a pretty nice summary of what's going on there. So we have the pandemic, we have the US election coming, and also since I'm a Finnish person, what am I considering right now? And also this can then function as a pretty nice inspiration for you to see, okay, this is what I'm investing in. And of course, investing long-term in, for instance, the stock market could be a pretty viable option. But of course, this is not investment advice. Remember that and do your own research. But still, yeah, hopefully you will enjoy some of the things I'm thinking about currently. And if you do, please smash the like button. Also, let me know what are you currently investing in. And yeah, if you want to see more content like this, subscribe to the channel. Anyways, let's kick things off. Okay, so what has happened this year? You might have heard talks about the stock market is overvalued, the economy is not doing too well. What's going on here? Well, remember, the stock market is not the economy, and the economy is not the stock markets. This is something I also talked in my previous investment video this year. And well, is the stock market overvalued? How do we start? How can we look into it? Remember, in the beginning of this video, I talked about the economist Robert Schiller. Well, lucky for us, he has a metric which basically looks at how much do we pay for the 500 largest publicly traded blue chip stocks in the United States divided by their earnings. And currently this number is over 30. So the historical average is close to 17. So clearly we are paying a lot more. The stocks are a lot more expensive now compared to history. So based on this metric, there are some signs of concern here. So let's take a look at another indicator, the Buffett indicator, which is named after one of the most famous investors, Warren Buffett. And this indicator is looking at the US stock markets divided by the GDP. And according to this graph, it's 66% higher than its historical average. It's pretty close to the levels where it was before the crash in the year 2000. Okay, so what is the GDP? Well, the GDP is the gross domestic product for a country. So the final products or services produced in this country for a period. And if we look at the United States and Finland, well, in the United States, for the second quarter this year, the growth rate was for the GDP over -30%. So this is the highest negative number since the Great Depression. And in Finland, things don't look too good when you look at this. It's over -4%. Okay, so based on these numbers, it doesn't look too good for the stock markets since it's pretty expensive. And on the other side, we have the real economy's GDP numbers, which don't look too good. What's going on here? Why am I even considering investing in the markets? And is there anything positive here? Well, there's a few things here. For starters, we have the GDP numbers that we discussed earlier. They are from Q1 to Q2 this year, so from January till June. But actually this week we got published numbers of the GDP of the United States for Q3, so that's from July till September, and we saw the largest growth ever here in GDP, over 30%. So we're still not out of the deep water, but that's at least some promising numbers. So the stock market bottomed this year, but then quickly recovered, which at least took me by surprise. And there might be a few things that helped it along to recover quickly. And first, the Federal Reserve, which is the central bank of the United States, quickly came to the rescue and started printing money into the economy. But there's also the interest rates that are currently so low. So there's a fear of missing out, because when you're investing in the stock market, it has continued to grow, while when you look at other investment opportunities with interest rates being low, that of course there's a fear of missing out, that what should you instead be investing in when the markets continue their growth. So there's a bit of a dilemma here, that for how long can this go on, because at some point it should start to decline, right? Who knows what's going to happen here? Can it continue to grow for a few years, or will we see a dip? But at least based on history, the stock market has been one of the best performing assets long term. Alright, so just to confuse us even just a little bit more, we have the upcoming US presidential elections, and when we look at the stock market, there doesn't seem to be any greater or less greater returns around the presidential elections in the United States. But instead there just seems to be more fear and uncertainty. And one way of looking at uncertainty on the stock markets is called volatility. And when we look at volatility, there's one way of measuring it is, for instance, the VIX index. And when the VIX index goes up, it means there's more uncertainty and fear. And that's precisely what's going on this time around. So nobody knows who's gonna win, is it Trump or Biden? But historically looking, when presidential elections are tight, there seems to be more uncertainty and fear on the markets. But of course, you might be saying, Axel, we want to know, how does the stock market perform under a Republican president versus a Democrat president long term? And in fact, there is a study published by a UK investment bank that shows that since 1947, the stock markets perform under a Republican president on average a return of close to 6% yearly, compared to when we have a Democrat president, the markets seem to return close to 11% per year. But of course, the 2008 recession and the current pandemic have both happened under a Republican president, and that's why in the study they also excluded these two periods, but still the stock market seemed to outperform during a Democrat president. And this also seems to be supported in another study where they looked at the stock market since the late 1920s till 2015. And here we could see that the annual excess return on the stock markets was 11% higher under a Democrat president versus a Republican president. But I don't think we should have any biases, so of course I went digging a little bit deeper into the 19th century and the year 1857. And I found a stock market research where they looked from that year into modern days. And in the research, they supported the statement that the US stock markets seem to perform better when they have a Democrat president elected. But there's a small caveat here, that when we exclude the Great Depression, which was a global depression during the late 20s till early 30s, there was a Republican president elected, and when we excluded this period, the stock market returned better under a Republican president, just a little bit. Alright, so what a nice history lesson, but what are we going to do with all this information? Well, I think the stock market is gonna do what it's gonna do. And for me personally, I just like to focus long term and try to look at investment opportunities and just stay focused. And this leads me to my next point, where we're gonna look at what am I interested in and how am I invested. Alright, so me as an investor, or whatever you wanna call me, I like to follow a few basic rules. And obviously, since I'm an entrepreneur, I need some cash at hand to weather out the storms, so I can't take too much additional risk. And since I need to have cash at hand, lucky for me, the inflation in Finland is low. And inflation is, of course, for instance, when you buy groceries, you go out eating, and when the inflation is high, then that means that the prices increase. And if you only have cash, then of course your cash will be devaluated in the real economy. But then regarding investing into the stock markets, I still believe that you shouldn't be putting in all the eggs in the same basket. And not putting all my money into the same basket means, for instance, that I'm not investing all of my money into Tesla, even though I think it's an excellent car company and I like Elon Musk, or that I would be putting all my money into Bitcoin. Actually, I've invested into Bitcoin, but that I will discuss in a moment. And instead, what I've been focusing on is investing into stock market index funds, both globally and then also in the US stock market. So for instance, the S&P 500. And I've been making sure that the transaction fees are low, so it doesn't cost too much to do these transactions. But then of course the valuations of the stock markets are pretty high. It's expensive, like we discussed earlier. So there's a lot of uncertainty here. And also, since the Federal Reserve, the central bank of the United States, is printing money into it, nobody knows that for how long is this sustainable. Alright, so in order to try to protect me from the possible downside in the markets, I bought also some gold, but that didn't seem to work too well in the beginning of the year. When the stock market dropped, the gold prices also seemed to drop. Now they've both been increasing together, so it didn't work too well there. But historically, gold has sometimes been seen as a pretty nice protection for the stock markets. And also, I've been not just focusing on the traditional gold, but also investing some amount of money into the modern digital gold, which is Bitcoin. Now basically, Bitcoin is a speculative asset, so for me, when I put money into it, I'm hopefully gonna get some returns on it, and it has already returned something, but I've gone in with the expectation that, hey, this could basically go to zero, so it's just a speculative asset there. But that's basically just touching the surface on what I'm investing in and what am I interested in. You can also leave a comment here if you want to see more on what I've specifically invested in and also what I'm also thinking about. So for instance, some interesting tech stocks that I'm looking into, like Nvidia or Tesla or any of these companies. But yeah, that's basically it for today. Hope you enjoyed this. If you did, remember to smash the like button and also leave a comment if you disagree with any of my opinions. I'm up for anything. And also remember to subscribe to the channel, and I'll see you guys in the next one.